When trying to predict the path of interest rates in the Eurozone, economists and analysts play a complicated game of signal analysis and Kremlinology. With the European Central Bank's Governing Council comprising 26 members who frequently voice disparate views, divining where policy is headed means closely watching every utterance from the most influential policymakers. In this high-stakes exercise of reading the monetary policy tea leaves, ECB President Christine Lagarde is not the first leaf to which the diviners turn. According to a recent Bloomberg survey, only 40% of respondents said Lagarde was among the top 2 executive board members they follow to inform their rate expectations. The former French finance minister and IMF head arrived at the ECB without prior central banking experience, and she has defined her presidency differently than her predecessors like Mario Draghi. Lagarde sees her role more as a chairwoman brokering consensus rather than singularly determining policy direction or being the chief spokesman, as Jean-Claude Trichet insisted. Lagarde's speeches are very important, but they don't capture turning points as such or changes in signals, said Pete Haynes Christensen, a Danish bank strategist. Her approach was on full display after the ECB's recent rate cut, when she refused to elaborate on future moves, quipping, "I'm sure that you will hear some of my excellent colleagues take their view. So if not Lagarde, who are the euroseers most closely scrutinizing for clues on where rates are headed?" The top 2 ECB diving rods, according to the survey, are Isabel Schnabel, the German executive board member overseeing markets, and Philip Lane, the Irish chief economist. Schnabel has carved out an influential role setting the agenda on key issues like climate change's impact on inflation and how the ECB might use its balance sheet in this new economic regime. She was the first to thoroughly discuss these vital topics, though she has been criticized for being overly hawkish and retaining the possibility of further rate hikes until quite recently. Schnabel often sets the agenda on challenges ahead, commented one analyst. It's therefore enlightening to contrast the views of the 2 top ECB tea leaf readers. Lane tends to offer more academic, detailed assessments of the Eurozone's economic health, sometimes employing esoteric jargon. He drew criticism for ECB forecasts underestimating the scale of the inflation spike and clinging too long to the transitory argument. But euroseers still parse his public remarks with a Talmudic intensity. Among the national governors, Mr. Knot is my first choice, said one banker, referring to the respected Dutch central bank chief Klaas Knot, considered a potential Lagarde successor. He's clearly in the hawkish camp, but his views are well-reasoned and open to argument. Germany's Bundesbank president Joachim Nagel ranked 3rd among the most closely watched for clues, given the heft of Europe's largest economy. The pragmatic French central banker François Villeroy de Galhau also ranked highly, seen as a centrist willing to refine his positions. Indeed, Villeroy surprised some before the last ECB meeting by insisting a second straight rate cut in July shouldn't be ruled out, countering market expectations. Such deviations from the consensus are quickly dissected by analysts for portents of future moves. Across the 20 national central banks, a wide range of views get voiced as the ECB shapes its policy amidst conflicting economic data. Portugal's Mario Centeno wants a few more rate cuts, while peers like Belgium's Pierre Wunsch see likely just one more trim before pausing to monitor inflation's path back toward 2%. With so many cooks seasoning the monetary policy broth, divining the ECB's actions requires a discerning palate and finely tuned senses. Every nuance and tick gets analyzed, for as former U.S. Deputy Treasury Secretary Larry Summers has joked about Fed watching, there are people who can look at 2/10 of a speech by Paul Volcker and say, he's going to tighten in 6 weeks. The high-stakes puzzle of solving where rates go next is reminiscent of ancient Celtic Druid rituals, where the shape of clouds or the flight pattern of birds was augured for deep meaning. Today's economic druids closely read speeches and policy statements like medieval monks poring over sheepskin tomes for hidden meanings. So who is most bellwether within the ECB's ranks? Whose remarks will shift the haze and provide clearer signs of whether more cuts are coming or if the hiking cycle has ended? Opinions differ, but a strong case can be made for the views of Knot and Nagel as bellwethers of the hawkish, inflation-obsessed Germanic monetary policy tradition. Knot in particular stands out for his well-reasoned and open-to-argument positions, staking out a moderately restrictive policy stance going forward. He has acknowledged that rates would still be tight even after another cut or two, embracing just limited further easing. This meshes with comments from influential German Nagel that the ECB is not on policy autopilot after its tentative first nudge downward on rates. He seems to be signaling a stingier, more reactive approach to any further easing amid still elevated inflation risks. Schnabel and Lane, while agenda setters on key topics, have been more circumspect on telegraphing their specific leanings for upcoming policy moves. Their roles seem more of providing the analytical framework for debating the path ahead. Hawks like Knott and Nagel are drawing a line against a return to the extreme accommodation of the past decade. They have witnessed firsthand the anguished Teutonic stomach pains caused by the ECB's negative rates and digitally printed money deluge. Having been burned by miscalculation before, they will move cautiously and deliberately to retighten policy at the first whiff of entrenched inflation down the road. But these hawkish voices must be counterbalanced by doves willing to respond decisively if the Eurozone's longed-for disinflationary process goes into reverse. Colleagues like Sternara's see the need for more preemptive rate cuts to ensure against an economic hard landing. Centeno's less defined call for a few more reductions could simply be a centrist's attempt to forge compromise by leaving the door open to further easing if conditions deteriorate. His fellow middle-of-the-roaders like Villeroy may still get swayed by incoming data points that could change the policy calculus. Indeed, Villeroy's recent surprising dovish comments signal how even traditionally hawkish members can evolve their stance based on new information and circumstances. There is no dogma preventing a recentering of market expectations. So while bellwethers like Knott and Nagel may set the initial boundaries, listeners must stay attuned to the full choir providing an evolving and dynamic chorus of perspectives. For an institution self-defined by consensus building, no single voice can monopolize influence over the passage of time. The pursuit of reading between the lines and separating signal from noise is nothing new for central bank watchers. Seasoned econo-watchers develop their own skilled methods, some no doubt passed down through oral tradition, of divining meaning from the patterns before their eyes. Larry Meyer, a former Fed governor, recalls studying every verbal clue. The progression of tenses was everything. If it changed from economic growth will remain solid next year to economic growth is expected to remain solid next year, that was a big change. A subtle change like that could move markets. Likewise, veteran euroseers likely catalog phrases and linguistic tics to judge whether comments herald a material shift or are simply reinforcing the status quo. They must develop finely tuned baloney detectors to filter out insincere noisemakers or strategically placed decoys. The pressure scrutinizing every mangled verb and garbled dependent clause will surely intensify around future ECB decision points. Nerves and stakes will be heightened by any unexpected acceleration or slowdown in disinflation's path. Furrowed brows and intense discourse will surround each statement for signs of an emerging consensus. Is the baseline outlook still intact or starting to crack? How are the centrists realigning allegiances? Are new falcon versus dove blocks solidifying new boundaries? For to misinterpret the sacred augurs, to read the omens wrongly in times of economic fallowness or excess could spell deep misfortune. Like medieval kings misreading signs and portents at their peril, any policy errors born of misreading the ECB's auguries could have devastating economic consequences for the Eurozone. Like ancient kings misinterpreting celestial signs at their mortal peril, modern monetary missteps in fighting inflations or recessions can inflict deep pain and stoke civic unrest. The high stakes and intense scrutiny lead to a strange scrutiny of every utterance by the ECB's key figures. Every public remark, no matter how seemingly anodyne, is picked over for hints of future policy leanings and emerging groupthink. This atmosphere can breed its own pathologies, as clearly intelligent and well-intentioned people get swept up in overly reading the tea leaves and projecting their own meanings onto ambiguous statements. It is the classic failing of Kremlinologists who turn molehills into geopolitical mountains through excessive exegesis. In such an environment, irrationality and conspiracy-mongering can take root. The more intensely something is watched and interpreted, the more likely it is that the watcher will perceive profound meaning in every passing cloud formation rather than the random motions of transitory vapors. Perhaps Lagarde's reticence to be overly predictive or seen as an oracle is a wise reaction to these difficulties. By ceding ground as a divination focus, she avoids the psychological pressures and pathologies that come with scrutiny overload. Instead, she nudges the euroseers to turn their gaze across her entire lineup of excellent colleagues, with their diverse array of views. This forces euroseers into a more holistic, contextualized assessment, grounding their skills less in reading singular leaves and more in seeing the emergent patterns of the full branches and forest. When seen from this widened perspective, it becomes clear there is no monolithic hawk or dove regime in determined control of future rates. The voices blowing across the monetary policy skies are multidirectional and ever-shifting with the atmospherics. Trends and tendencies can temporarily solidify around certain clusters, only to then dissipate and reform in new configurations as new data forces a rethinking. Today's hawkish headwinds can just as quickly reverse into dovish drafts pushing policy in a new direction entirely. Rather than fruitlessly searching for indelible signs set in stone, perhaps the wisest analysts recognize that the ECB's path only becomes truly clear through time as certain paths get inevitably closed off and new forks become the only viable way forward. This perspectival shift from divination to open-minded wayfinding requires true humility and willingness to be surprising. Prejudging the route ahead based on previous patterns often leads the misguided down the wrong trail entirely when realities suddenly change underfoot. The most well-traveled and experienced euroseers may be those most adept at reading the present landscape, considering the full range of possibilities ahead, but then holding their maps lightly and adjusting nimbly to new contours as they emerge over the horizon. Truly prescient euroseers realize no one person or subset of voices contains the full truth. The path only reveals itself gradually through the aggregated wisdom of the full set of diverse viewpoints brought into dialogue. Premature foreclosure on any route causes one to miss key signs and overlook fruitful detours. So, in this never-ending juggling act of considerations and humbling recalibrations, who are the euroseers most equipped to negotiate this maze with all its hairpin turns and disappearing paths? One clear skill set is the ability to set aside personal biases and ideological hobbies for monetary policy. The purest divination is achieved with clear eyes, not clouded by staring too intensely at every rustle of the bushes hoping to see one's preconceived notions validated. Members like not strike some as particularly adept at suspending their natural hawkish leanings when realities shift. Despite his Germanic central banking roots, he has shown a cold-eyed pragmatism in adjusting to the latest data and not reflexively imposing austerity. Figures like Schnabel may attempt a similar objectivity with their analytical bent and academic detachment from partisan fray. The economists attempt to follow the numbers wherever they lead, dispassionately considering all factors rather than cherry-picking examples supporting one doctrine. But true objectivity is always devilishly hard to achieve, especially in the heated atmosphere of furiously discussed monetary policy debates. One can espouse neutrality while still subtly framing issues through inescapable conceptual lenses. Perhaps the most insightful are those able to triangulate perspectives across the full range of ideological inputs, synthesizing kernels of truth from even the most seemingly biased viewpoints. Villeroy seeks to occupy this coveted centrist space, learning from and respecting the arguments of hawks and doves alike. He sees value in firmly anchored inflation expectations preached by former Bundesbankers, but also the more elasticity sought by Mediterranean colleagues worried about growth shortfalls. Such radical open-mindedness avoids dogmatism and prevents falling into the trap of thinking one paradigm or mental model contains the full truth. All frameworks are incomplete and miss key dynamics in varied situations. Only the combination of multiple angles brings true depth perception. Still, even for flexible, pluralistic minds, the sheer volume of incoming data, economic indicators, commentary and policy speak can overwhelm and induce a type of analysis paralysis. At some point, there is simply too much noise and one must make decisions amidst radical uncertainty. No map can predict all contingencies or assure the perfect route. The traveler must eventually choose their best path forward based on the overall landscape. Which is perhaps why, despite all the day-to-day volatility and tea leaf readings, the ultimate role of Lagarde and the ECB Governing Council is so vital. They bear the burden of synthesizing all available information into actionable policy after all other voices have had their say. For all its imperfections and interminable debates, only the duly constituted decision-making body contains the legitimacy to apply judgment, assume risk and set Europe's monetary course into an uncertain future. All other forecasts and predictions are simply advisors to be weighed accordingly before the final journey is set. Lagarde may see her role as broker and referee because she fundamentally recognizes the limits of any single perspective, no matter how thoughtful or esteemed the sourcing. Only by fostering a robust discourse of counterpoints and critiques can the most balanced, holistic approach emerge. This echoes the broader tradition of central bank opacity and anti-instruction tendencies. Rather than being reduced to a weather vane shifting with every passing wind, the central bank must stand as a resolute pillar preserving optionality for as long as possible before putting stakes in the ground on a definitive path. The euroseers and divination obsessives will spar and bicker eternally over the finest details and shades of gray, but the final moves belong to the policymakers themselves, informed but unbound. Fidelity to any one hawk or dove regiment over others would ultimately restrict prudent flexibility. In this light, much of the daily exercise of Euroseeing and ECB Kremlinology appears more hobby than serious practice. It engages the public and markets through entertainment spectacle, providing narrative intrigue between relatively long periods of stasis. But when approaching true forks in the road, the bystanders must cede way and allow the authorized decision-makers to weigh all the various threads of information and counsel at their disposal. Only then can legitimate, democratically derived rulings emerge through the institutional processes. And even when the fateful dice get rolled, all bets are still off on how events will actually unfurl. Policy is simply the beginning of a new journey, not the final destination. Adapting to unforeseen events requires the constant refreshing of maps and contingency planning for alternate routes. The true test will come in the ECB's agility and responsiveness to inevitable surprises down the trail. Markets, economic shocks, and political forces can rapidly make a mockery of even the most considered policy roadmap when crossed at inopportune junctures. So in many ways, divining the future of European interest rates is an infinite game in reassessing and recalibrating. The only certainty is the lack of certainty on the horizon, and the recurring need to adjust course as conditions metamorphose underfoot. It is a humble, never-complete quest of staying attuned to the latest signals and whistles in the whirling data maelstrom. And it requires a diversity of voices, some loud and clear, others faint revelations detected only by the most discerning diviners. One must maintain openness to all perspectives, jettisoning hardened dogmas while respecting the deepest wellsprings of monetary policy prudence. Only with beginner's mind can each bend in the path be seen anew, and the way once more found through the forest.